This is BBC World. Now from Singapore, Asia Business Report.
Welcome to Asia Business Report. I'm Sharon Lail in Singapore. Now, foreign investors have been falling over themselves to get a piece of the action in China's banking system. Bankers from all corners of the globe have thrown caution to the wind in a bid to get into what has the potential to be the world's biggest banking market. But is this a wise move? Well, the jury is still out, as the BBC's Shanghai correspondent Quinton Somerville has been finding out.
It's been the year of the foreigner for China's banks. Foreign investors were desperate to buy into the country's banks in 2005 and will likely be just as desperate in 2006. With a huge potential market and the world's keenest savers, they just couldn't resist. 19 foreign institutions bought over $16 billion worth of shares in 16 Chinese banks. The only thing that seemed to be holding them back was a government limit on overseas shareholdings. China Construction Bank was the year's success story. The country's second largest lender floated on the Hong Kong stock market in November for over $9 billion. Since then, its shares have risen well. Good news for those foreign investors. But getting into banking in China still carries big risks.
It's been built up largely based on political relationships, lending policies, risk management bear no resemblance to the way that they operate in a properly disciplined Western financial institution. The Chinese recognize that if they're going to compete with foreign banks, they have to quickly adopt policies which put them on an effective competitive footing with Western banks. And the quickest way to do that is to encourage investors to come in a small way, because the limit is 25%, but so that they can leverage that expertise.
The state has cleared over $100 billion worth of bad debts from the Big Four's books, but they're still in pretty bad shape. The banking regulator found over $73 billion worth of irregularities in loans and other funds in the Big Four by the end of this year. And there will be no more state bailouts. Overseas investors are now being fingered to pick up the reform bill. Nevertheless, there's still plenty of appetite for China's banks. Even though little notice was taken this year, the warning will be the same in 2006. The best advice to investors: buyer beware. Quinton Somerville, BBC News, Shanghai.